you don't have the fear of missing out. Patience. If you don't have patience, always dollar cost average when you're buying on the dip. What helps you build wealth passively is no cap on salary, and will fund your whole lineage lifestyle. That's what buying the dip would do. Well, the RSI indicator measures the undervalued and overvalued levels of companies. Then the next indicator we want to add is the exponential moving average. When the RSI gets to the 30 level, it typically means it's oversold. With price, it shoots back up. So what are demand zones? Demand zones are similar to support zones, but demand zones are where you see institutional candles. I always use these indicators on a higher time frame, like the weekly or the monthly. Check this out. I circled this area because the RSI isn't 100%. Demand picks back up and it went up. Fizzard is also another company I brought due to it being so oversold. They had good guidance even though they missed earnings. Last time their RSI got below that 30, their value increased over 200%. Stop buying stocks at the wrong time. You're not buying stocks, you're buying traps, and I'm gonna show you how to not buy a trap anymore. With just 2 indicators and a little technical analysis, I'm gonna break it all down and explain it to you. The first thing first, these are going to be the 2 most easiest and most profitable indicators to use on your chart, and we're going to go over it right now. Why should you buy the dip? Well, buying the dip means you don't have FOMO. You don't have the fear of missing out. A lot of beginners mess up because they have the fear of missing out on a certain company without understanding how to buy it at a discount. So they just buy it off the fear of missing out, so they don't have to miss out. Another thing buying a dip allows you to do is have patience. If you don't have patience, then you won't get paid. Patience pays. And buying at a discount speaks for itself. But the next thing is to always dollar cost average when you're buying on the dips. Dollar cost average allows you to buy more shares if the price goes lower, and it also gives you a way to stay consistent. Check out the board, man. What does dollar cost average, what does buying a dip do for you? Well, it helps you build wealth passively. There's no cap on salary, and will fund your whole lineage lifestyle. That's what buying the dip would do. And that's why a lot of investors promote buying the dip. And today I will show you how to buy the dip in a safe way. And as long as you continuously dollar cost average, you'll continuously beat the SPX index. First thing first, we want to add the RSI indicator. What is the RSI indicator? Well, the RSI indicator measures the undervalued and overvalued levels of companies. Once it's overvalued, stock price tends to fall. If it's undervalued, stock price tends to go up. But it's not the holy grail, and I'm gonna show you how to pair it with other things to make sure that it'll actually go up in value. Click on relative strength index right here. Boom. Then the next indicator we want to add is the exponential moving average, which is right here. Boom. These are the settings you're going to want to have on both of these indicators so you can actually see when to buy the dip and be profitable with buying the dip. Just screenshot and pause and make sure it's all correct. The only inputs you should have to do is this, and it should already be at 14. So let's check out the RSI. The RSI indicator, the only thing you should really have to change is the color on them. It's already at 14. The style, mine is green right here, red right here. But check this out, when the RSI gets to the 30 level, it typically means it's oversold. And as you can see what price do once it reaches this oversold level or undervalued level, it shoots back up. So this RSI level right here at the bottom, demand picks up a lot on great companies. As you can tell, the SPX index only hold great companies, so you can see demand physically picking up every time it gets to this 30 RSI level. Boom, boom, every time it gets down here. What are demand zones? Demand zones are similar to support zones, but demand zones are where you see institutional candles or big candles or a lot of buyers step in. At this 200 EMA, you always see big buyers stepping in here. Check that out. Right here, straight buyers. Below it, straight buyers. Even at the RSI, straight buyers, it goes up. You can see demand picks back up. The next thing I'm gonna do, I'm gonna go over a couple of stocks that are or was previously at demand areas, and we'll just go over it so you can really see and really tell and can see how it plays. The website I'm using is tradingview.com. It's a free subscription to it. Check it out. It's one of the easiest and the best platforms to use for seeing charts and analyzing fundamentals as well. So check this out. Apple at the 200 EMA. Not only was it at the 200 EMA, but it was approaching that 30 RSI level. And we can see here, big buyers stepped in. I always use these indicators on a higher time frame, like the weekly or the monthly. Mainly I use it on the daily to dollar cost average when it's oversold. But check this out. Let's check out Apple. Once it got to this 170 level at the 200 EMA, we can see what happened. A lot of buyers stepped in. That's why the 200 EMA is one of the best dynamic supports you can use on your charts. Check this out. Back in 2023, when it got to this 124 level, demand just picked up. It had like what, 5+ green candles in a row. Check this out. Back in 2018, not only was it oversold below the 30 level on the RSI where demand usually picks up, it was also at this 200 EMA acting as a dynamic support, and demand picked up there. Check this out. Back in 2016, Apple was at the 200 EMA, pretty low on the RSI. Demand picked up back in 2013. As we can tell, back in 2008, it broke below. It was going pretty sideways during the global financial crisis. But as we can tell, once it got below that 30 RSI, it picked back up. This happens a lot on, I guess, the Magnificent Seven, or financially stable, strong, and profitable companies that everyone uses, because next we have Meta. And we all know how big Meta is. Meta has over 3 billion monthly users, over 2 billion active daily users a day. But let's check them out. Starting back from 2018, that was oversold as well. And we see what happens once companies become oversold. It starts to turn up, demand starts to pick up. Check out this at the 200 EMA. 200 EMA demand picks up very strong back at that 120 level. Then look, back in 2020, it also became oversold again on the RSI near the 200 EMA level. Demand picked up and ripped. Check this out. I circled this area because the RSI isn't 100%, but as we can tell, it will make you a lot of cheese. But check this out. It originally became oversold at around $230, but it continued to fall about 63% until it went back up over 220%. So this RSI level will help you buy on a dip, but it's not the holy grail of just buying on a dip. Check out this. We have a support right here. We have a lot of confluence at this area right here. Check out demand right here. It held and it ripped right here. It had a couple green candles in a row. Check out this 200 EMA. Not only is it coming back down to the 200 EMA, but it's currently oversold on the daily time frame. And if we go on the smaller time frame, we can see what happens on the smaller time frame. Demand picks back up and it went up. Even back here, demand, it was oversold on the daily time frame, and demand took it back up. So if you want to know how to buy the dip, using the RSI and the 200 EMA will definitely help you. Demand picked up, it went back up over 75%. Yeah, in a year. This is one company I recently bought due to it being oversold and due to it being so great. This is one of the biggest Bitcoin holding companies in the world right now, but they're oversold on the weekly time frame and the daily time frame. Not only that, it's at this 200 EMA again, and it's at this old resistance turn support level. So it's high confluence that it could bounce. But check out the 200 EMA for MicroStrategy. The last time it was at this 200 EMA, it held up pretty strong. The last time it was oversold, demand held up at this level pretty strong as well. So now that it's back at this 30 level, and also at this dynamic support or resistance, but at this support that used to be a resistance, it should hold definitely. Fizzard is also another company I brought due to it being so oversold. They had good guidance, even though they missed earnings, but they're oversold at this level, they're undervalued at this level. This is another company I invested in at this level that should pay out really well. Check this out, this is the lowest that RSI ever been before, but the last time that RSI got below that 30, their value increased over 200%. But yeah, this is why the 200 EMA and the RSI demand zones are very important and can really help you buy the dip. If you don't know when to buy the dip when it becomes oversold on a daily or weekly time frame or monthly. Buy it at a demand level where previous demand picked up there a couple times, and also buy it when it becomes undervalued.